One of the things that we've been doing is we started putting in a trading debrief and look at what's gone well and what hasn't. We had several of our positions hedged up really well, where we were set up where we could do well if they went up, but we really took a lot of risk off the table if they broke. And of course, a number of these broke, and we did give some money back without a doubt, but it was a fraction of what it could have been otherwise. So that went well. And then what could we have done differently? We were long XRP. We got out of that. It was one of those where it had an unbelievable break overnight. We were able to sell it on a bounce, but you get this really weird behavior when you trade cryptocurrencies. That's just different than everything else. And that's that it's open on the weekends. And we technically got an exit signal on a Saturday. So then you're getting into the question of, are you going to exit the position on a weekend? And really the way that I view this is that if the volume is there, you get out. If the volume's not there, you don't get out. But all you had to do is go back a week ago, and this social media post that President Trump did about the cryptocurrency reserve, it caused all the cryptocurrencies to explode on really high volume on a Sunday, and then immediately reversed and went back down. So I think we could have done a better. We could have saved ourselves a half an hour if we'd gotten out on a Saturday when the exit signal actually came rather than waiting till Monday. Our live cattle trade, we had good money in it, but it reversed on us pretty hard. And if we had leaned into the price action, especially just hedging more, we could have definitely saved some money on that. Now, one good thing is I've gotten several pieces of feedback from people that messaged me, either an email or text, just to express how grateful they were for the Bitcoin hedges. And that a number of people were able to take a hedge off an enormous amount of risk, such that when Bitcoin broke out down, they were in a great spot. So now, one of the questions that I think it's one of the most important questions we can ask when we trade is, what positions are making money right now? And do we have them on? And if not, why not? Now, there can be valid answers for why we don't have them on. But what I find is people don't even ask this question. And then that makes them really ignorant to what's going on around them. So if we look back in February, some of the things that we saw, Alibaba exploded. And that was something that kind of got through the cracks on us. We didn't really do a good job of seeing it until it was so far from the base. And then we've had the long European stock indexes. We've had this on our list, but I was kind of lukewarm about getting long them, and they were just great. And then the European banks were also really, really good. Another one that we mentioned was short Coinbase and PayPal. There is a faction of people out there who are really, really bullish Coinbase. Coinbase had outstanding earnings, a gapped higher and a thrust bar up off of earnings. And then the next day it just reversed, and it's been a shit show ever since. And that is a classic. You hear Mark and I talk about news reversals. It's a classic news reversal. You had a bullish. First of all, I thought Coinbase was really underperforming. If you looked at all the other if you looked at it as a correlation trade to cryptocurrencies, it was not making new highs. It was nowhere near that. Then it had earnings, very good earnings, and it sold off, and it's just gotten clobbered. And PayPal was something that we identified earlier, and we just didn't do a good job getting shorted, and PayPal got clobbered. Both of these got clobbered. Now, top fundamental themes, the AI and blockchain theme. This is something that we've been watching. This theme has come under a lot of pressure recently. It's all under the technology and innovation theme. Telecommunications and infrastructure. So a lot of the telecoms, a lot of the wireless companies, they've been doing really well, much to my chagrin, because it's been one of my themes. But AT&T, Verizon, T-Mobile, they really took off. Software and cybersecurity, Mark mentioned that. We have aerospace and defense, financial services. One of the things in financial services that's interesting is there was kind of like you had traditional banks, and then you had financial services, and those companies were doing really well until about halfway through Feb. Utilities we've talked about, with a lot of need to power blockchain and AI. There's a number of utility companies that have done really well, and then education and media. So short themes, we had shipping and transportation, we have oil and gas exploration, we had food and alcohol companies, and we had real estate sectors.
This episode is just a small portion of our Reads Report webinar, so if you would like to download the full report and watch the complete recording, click on the link in the comments to sign up.